Hi friends, now in this video we are going to discuss about the year-end capital adjustments, and first we'll discuss how to record entries when the capital is introduced, and we also discussed how to calculate interest on capital, and also we discuss about how to record drawings and also interest calculation on drawing, and also we just close the drawings by transferring to capital, and we also discussed how to share the business profit to the capital account or to the owners, and at the end we also discuss about how to split a company. So now let's start the video. So first we'll discuss about how to record when the capital is introduced in the business. So very simple. As a business entity concept says that the business and the business owner is different. So as a business, when the owner is invested, you are receiving the money and the owner is giving the money. We are receiving, right? So as a business concept, we are receiving, so we need to pass the receipt voucher in tally application. So very simple. So just go to accounting voucher. So first we have the business activities. Actually, see, the opening capital as on 1st April 2019 is around 7,67,064 as opening capital. I just recorded already. Opening capital is recorded. Just go to display, account books, ledger, and open the capital ledger. You may see that the capital is already recorded as opening balance of 7,67,064. If the business is the new business, then there will be no opening capital. If the business is carry forward business from last year to current year, then automatically the system takes even opening balance as well. Yes, of course. So the opening capital is around 7,67,064 rupees, and again now the new capital is introduced on 1st May 2019 as rupees 35 lakhs. And you may see that interest on capital is around 10% per annum. But one of the most important thing is the opening capital is around 7,67,064 rupees. And the new capital, and most important, and the new capital is introduced on 1st May 2019. That means how we are going to calculate interest on this capital. So very simple. On 7,67,064, we need to calculate interest for 12 months. But on 35 lakhs, the capital is introduced on 1st May. So the interest rate is 10% per annum. But it is not about per annum. It is just about 11 months. Right, so on 7,67,000 we need to calculate interest at the rate of 10%. On 35 lakh we need to calculate the interest as 10%, but only for 11 months. So very simple. So first, the opening capital is already entered. As when you are going to enter the opening capital, if the opening capital is already updated, then there will be no issue. If the opening capital is not yet updated, then you go to accounts info, ledger, and create. Here simply I'm just making a dummy entry because I already updated. Simply create capital account, and the capital account comes under capital account. And down in this location you need to enter the opening capital as 7 lakh change. Here in my system the opening capital is already taken, so I'm not going to enter any opening balance. Alright, you may see here 7,67,064 rupees, the opening capital which is already taken, right? So next we'll just record a new introduction of the capital. So I just go to accounting voucher. As a business we are receiving the capital, so just go to receipt voucher, and yes, we just confirm that in which form we are receiving the capital. On press F2, and we are receiving capital on 1st May in the form of cash, and here simply select as capital. On 1st May we are recording capital of 35 lakhs. Yes, then control plus A, save. Yes, now if you want to open the capital account, go to display, account books, ledger, and open capital account. Down here you may see that alt plus F2 from blank again to blank. You may see that yes, opening capital 7,67,064, and the running capital we introduced on 1st May is around 35 lakhs. The total closing capital is about 42,67,064. We are not going to calculate 10% interest directly on 42 lakhs. First, on 7 lakhs change we need to calculate interest for 12 months. On 35 lakhs we need to calculate interest for only 11 months. You just see next. And our next activity is about, after once recording capital introduction, next we'll see about how to calculate interest on capital. Right, so most important, as we already updated, again here two points to be remember. One is the interest is charged and paid if the interest is charged and paid, in that means directly you may record a payment voucher and there will be no impact on the capital. Now the capital is around 42 lakhs. So on this capital, if the interest is calculated and the interest is paid within the financial year, then you need to record directly a payment voucher. Just go to accounting voucher FI payment as cash to interest on capital. Simply create a ledger as interest on capital. The business is paying interest to the owner, so comes under indirect expenses in the company, and it is an expenditure, and the GST is no more applicable. GST is applicable only on goods and services. Interest on capital is it's not a good, it's not a service, so GST is no more applicable. Yes, not applicable. Yes, here you just enter the total interest that you paid. But the question is that if the interest is not paid, then we need to transfer the interest amount to the principal capital. What is the current principal capital as an closing? The current closing capital is about, just go to display, account books, ledger, open capital ledger, alt F2, from blank to access whole data. So here 7,67,000 opening capital plus 35. So total closing principal capital is 42 lakhs. On this amount we need to calculate interest. Either if we are paying interest to the owner, then directly you record a payment voucher. The same 42 lakhs, the principal capital will be carried forward to the next year as opening capital as same 42 lakhs. But if the interest is remain as unpaid, then we need to transfer the interest payable on capital need to transfer to the principal capital. Then the principal capital 42 lakhs will increase with interest. Now we'll just see how to calculate interest on capital. So very simple. So there is a formula actually. So interest on capital that equals to amount of capital. First the amount of capital into rate of interest. Amount of capital into rate of interest into a period of interest. You may see that on 7,67,064 rupees, we need to calculate the interest for 12 months. So on 7,67,064, 10%, directly 10% is per annum. So directly you may do that 76,700. But whereas we think about 35 lakhs, these 35 lakhs, yes, introduced on 1st May, so that we are not going to calculate any interest for the month of April. So out of 12 months we are going to calculate only for 11 months. Now here very simple, what is the formula? Amount of capital into rate of interest into period of interest. Whereas we are calculating 7 lakhs, we just done it for 12 months. But when we do the calculation for 35 lakhs, we are going to calculate only for 11 months. The total capital is 3 lakh 90. Total interest on capital is 3,97,539. If this 3,39,539 is paid, then directly you record as regular payment voucher, directly payment cash to interest on capital. There will be no impact on your current closing capital. The same 42 lakhs will be goes to next year. But now in this case we have not paid interest to the owner, then just go to F7 journal voucher and here select interest on capital as per nominal account rule, debit all expenses. So debit all the expenses. As on 31st of March, the total interest is 3,97,539. 3,97,539. Yes, this account is going to credited to capital. Yes, debit all expenses and capital is a liability which is payable. So we just transferred the interest to the principal. So what is the current year closing capital? 46 lakhs. Before it is just having only about 42 lakhs. Up to this 42 lakhs we added 42 lakhs change plus again 3,97,000. It's very close to 4 lakhs. So 42 lakhs plus 4 lakhs, total 46 lakhs capital has been increased. Is it clear? Control plus A, save. And next one is that the next we have about in the business. Next we have about drawings. Yes, as like see, we are taking the money from the owner and to the owner we are giving some interest. In the same manner, when we are taking capital from the owner, we have passed a receipt voucher, right? And likely when the owner withdrawn money from the business for his personal purpose, we need to pass a payment voucher. When we are receiving capital, we are passing in receipt voucher. When he has taken some money from the business as in the name of drawings for his personal purpose, we need to record in payment voucher. So very simple. The drawings amount is that, yes, but ensure that The drawings was done on 1st of June 2019. The total drawings is around 14 lakhs, right? Even see, we are paying interest on capital because we have taken money from the owner. In the same manner, when the owner withdraws money from you, you means company, on that amount also we can charge interest. Yes. So, but here again we have that interest on drawings is 10% per annum, but he is withdrawing the money on 1st of June. That means we will not charge any interest for April and May. We just charge interest only for remaining 10 months. We'll just see it, right? Now we'll just discuss how to record the drawings entry actually. So yes, we need to pass a payment voucher. For this drawing, we need to pass a payment voucher. Just go to accounting voucher, F5 payment, and just select either cash or bank and select a drawings account. Under drawings comes under capital account. Capital comes under capital account. Even drawings also comes under capital. Yes. Now yes, he has withdrawn on 1st of June. Yes, he has withdrawn from the business rupees total 14 lakhs. Yes, drawings done on 14th of drawings done for 14 lakhs. So I'm just recording the voucher. Yes. So next, on year ending, we need to calculate interest on drawings. So again same formula, but only one thing is that here, yes, he has withdrawn money. See, he has withdrawn money on 1st of June. He has withdrawn money on 1st June. So on 1st June, he has withdrawn rupees total 14 lakhs. That means we are not going to calculate any interest for April and May. Yes, of course, the rate of interest is 10% applicable on the whole amount, but we are going to calculate for the period of only 10 months from June to March, only 10 months. We are not going to calculate anything. So that's the reason here we are going to enter 10 out of 12. Out of 12 months, we are going to calculate 10% only for 10 months. That's it, right? So again here, on these drawings, whatever interest that we computed, on these drawings, whatever, so here, what is this 14 lakhs into 10, right? Just control plus n, open calculator. 14 lakhs into rate of interest into a period of interest, 10 months out of 12 months. So what is the total interest on 14 lakhs? We should collect 1,16,666 rupees from the owner. Yes, interest on capital is an expenditure, interest on drawings is a receipt. See, if the owner paid 1,16,666 rupees, then simply will record a receipt voucher as cash, either cash or bank. Select cash or bank and simply create interest on drawings. Interest on comes under indirect income. Interest on capital is an expenditure. Interest on drawings we are receiving from our owner, so it is indirect income. So if the owner paid interest to you, then you record as you received. If the owner is not paid interest to you, then again you increase the principal drawings to, again you just transfer the interest on drawings to drawings account. Very simple. Just go to again F7 journal. Already there is a drawing. See, just go to accounting journal. Here drawings account is already debited. Now we need to collect total 14 lakhs from the owner. So instead of that, we are going to calculate, yes, let's see, 1,16,666 rupees we are going to transfer from interest on drawings. See, drawings is an owner account. The account is debited. What is the initial drawings is only 14 lakhs. That means from the owner in the future we are supposed to collect only 14 lakhs. But now after transferring drawings, debit all expenses and credit all incomes and gains. Our income, interest on drawings is our income, so it is credited, and this income is transferred to the principal capital. What is the actual capital? Actual capital is only 14 lakhs, and then we just transferred our interest to the same principal. So the principal was increased from 14 lakhs to 15,16,666 rupees. We just given only 14 lakhs to the owner, but from the owner we should collect 15,16,666 including interest in the future, right? Control plus A. See, yes, we also discussed how to record capital and how to record drawings, right? Next we should know that how to close the drawings. It is not allowed to show a drawings amount in the balance sheet, right? I'll just show you. If you once go to balance sheet, and click on Alt F1, or you just click on detailed report, you may see that system is going to display drawings. System, see, it is not allowed to show drawings in the balance sheet. If there is any drawing, that has to be deducted from the capital. Yes, now we are going to settle the total drawings. Yes, from the owner we have taken total 46 lakhs. Actually 42 lakhs plus 4 lakhs, right? So how this was done? We have taken only from the owner, we have taken only 35 lakhs. The initial capital is there 7 lakhs, and again we have taken rupees 35 lakhs. Total capital 42 lakhs. On 42 lakhs, again we just added our interest. So capital is increased from 42 lakhs to 46 lakhs. So total we are liable to pay to owner 46 lakhs. And again the drawings, the owner has taken rupees only 14 lakhs, but again at year end we also transferred our interest to the same principal. So in total we need to collect 15 lakhs. So total payable to the owner 46 lakhs, total receivable from the owner is 15 lakhs. So now here we need to we need to reduce the capital by reducing rupees 15 lakhs. For this we need to pass an adjustment. Drawings account is showing a debit balance and the capital is showing credit balance. When a credit favor account is again credited, the balances of the account will get increased. So now capital is showing credit balance. So now I am going to make it a debit. So now here capital is showing around total 46 lakhs. Yes, from to the owner we should pay 46 lakhs. Is showing credit balance. To reduce this, you need to minus 15 lakhs 16,666. This is on the account of drawings. So here the total drawings is reduced by total capital. Yes. So now in the future, instead of paying 44 lakhs to the owner, we'll pay only 31 lakhs because these 15 lakhs are just stored. That's it. Control plus A, save. After the adjustment, if you once go to balance sheet, then there is no more drawings. Now the drawings has been waived off. Yes, at past it is showing total 46 lakhs. Again here minus 15 lakhs. So now here the system is simply displaying only 31 lakhs as payable to the owner. Yeah, now next we'll discuss about how to transfer the profit or loss to the capital. In the business, you are allowed to carry current year balance sheet to the next year, but we are not allowed to carry current year profits or loss to the next year. If there is any profit, we need to add to capital. If there is any loss, we need to reduce from the capital again. So very simple. So yes, first I'll just open the profit and loss account. Yes, in the business we have total 24 lakhs 99,540 rupees is a profit of the business. So this 24 lakhs has to be transferred to the balance sheet. Now what is the closing capital? How come this 31 lakhs? Yes, initially we have taken total opening capital 7 lakh 67,000 plus 35 lakh in the we have introduced 35 lakhs in the month of May as first May. So total capital 42 lakhs. For that 42 lakhs we have added 3 lakh 97,000 interest. Again we reduced to drawings 15 lakh 16,666 rupees. After that the closing capital is directly 31 lakhs 47,937. Now to this capital we have a profit in the business that has to be added. So very simple. The transfer of profit to the capital account is very simple. Just go to accounting order F7 journal and here see the always profit is an income. As per normal account rule, debit all expenses and losses, credit all incomes and gains. That means already profit and loss account shows credit balance. Now we need to transfer it. That means we need to debit it. So simply profit and loss account, the total profit is 24 lakhs 99,540.50 is going to transfer to capital. The initial capital is only 31 lakhs. Then now the capital is total 56 lakhs. Control plus A, save. Yes, now if you once go to balance sheet, yes, you may see that at down the total profit is 24 lakhs and less transferred 24 lakhs. Now the capital is around 56 lakhs. If you once go to display account books, ledger and open capital at Alt plus 1, Alt plus F2 from blank and to blank. Yes, the opening capital is 7,67,064 and again the capital was introduced 35 lakhs and again this entry should pass on 31st of March. Yes, control plus save. So yes, the opening capital is 7,67,064, and again capital introduced to 35 lakhs, and again we added the interest so to the capital, so total 3,97,539, and out of that we just reduced total 14 lakhs is the drawings, 14 lakhs drawings plus interest on drawings, total 15 lakhs 16,666 reduced from capital, and after that the profit is transferred to the capital, total 24 lakhs 99,540. Now the total current year closing capital is 56 lakhs 47,477. Transferring profit to the capital account is the business book of account last entry. After once the profit is transferred to the capital, we are not allowed to record a single entry in the business. That means we need to stop the book of accounting of the current year once the profit is transferred to the owners. So once the after all these adjustments, we need to split the book of accounts. So directly press alt F3, and just go to split company data, select company, and here select the date. I wanted to split the company from 1st of April 2020. Just enter split. Yes, now the company is going to split into, that means 2019-20 is enough. Now the new company is going to start from 1st April 20 and 20. The same capital has to be transferred to the next year as opening capital. Yes, it takes 1 or 2 minutes, so we are going to wait and ensure that it is not at all, it is, you have to split the company only post recording of adjustments. Once the company is splitted, we are not allowed to record anything in the old company. Now the one tally application, the one tally company is going to split into two. Automatically tally will pass all the closing accounts, all closing balances as opening balances, all closing stock as opening stock in this business. So you don't need to create a new company, you don't need to re-enter all the data. Simply use a function called as split. Automatically company will make two companies. One company will be divided into two companies. All the current year closing balances and the closing stock will be taken to the new year as opening balances and opening stock. So I also show the new year opening capital. I'll just show you. Yes, again I will just go to accounts info, ledger, and display, and here I open capital. Now at down you may see that yes, for the next year the opening next year opening principal capital is 56,47,477 rupees. Again in this year we will be calculating same interest, again transfer to drawings, again drawings, into drawings, again capital minus drawings, remaining net capital will be the net capital plus or minus profit or loss. Then again we will just calculate closing capital. So this is how we pass adjustments on year ending for capital. The same thing will happen if it is partnership. We need to maintain X capital, Y capital, Z capital. Then we need to pass the same interest as regular. That's it. Thank you.